Well, today we are very excited to talk about something very interesting. It's the topic that I mentioned at the outset, fundamental analysis. That kind of sounds scary, doesn't it? If you're new to investing or you're new to trading, you may say, what is that? That sounds kind of scary. Well, it really is a lot to take in. And I'm not going to give you a full-blown college course on fundamental analysis today. We're just going to take a few minutes and go through some of the basic things that I look at whenever I'm looking at a stock to buy. Now, remember, I'm a trader. I do invest also. Trading and investing are very different. Trading is really when you're speculating. You're trying to step into the market and take advantage of a trend. Maybe you're taking advantage of a short-term swing trend. You're a swing trader in that case. Or maybe you're stepping in to take a position in a new uptrend that's forming. In that case, you're a position trader. And then sometimes you may just see a stock that you really like. You may see a company that you really like and you say, I want to buy some of this company or buy this stock because I think the company is going to go up. And in that case, you might be considered a long-term investor, especially if you're planning on just staying in the stock, and especially keeping it until retirement. You can think of some of those companies that you might put in your retirement portfolio. Companies that some people might consider would be like Apple or Amazon or Tesla. Many of these companies that are huge juggernauts in their industry. And people just say, look, these companies are going to be around longer than I'm going to be around. And they're probably going to be growing for a very long time, so I'm going to put my money into those stocks. And that's a fine way to look at it, right? You can take a look at a company and say, I like this company, and therefore I'm going to buy this company. But you know what? That's only half the battle, right? Finding a company that you want to invest in or trade is great, but you also have to do a little more due diligence. And we literally call it due diligence, and that is getting your hands dirty a little and saying, what exactly does this company have going on? Are they growing? Are their revenues growing? Is the amount of income that they're deriving from sales, is that rising? Are earnings that the company is, like the net income, is that level rising? And of course, if you're a value investor, you want to know, is the dividend stable? Is the dividend rising? Has it risen in the past? So there's all kinds of questions that you want to ask whenever you go to, get ready just to buy a stock. And today what I want to do again is I want to introduce you to this concept of fundamental analysis. Let's define it real quickly. Fundamental analysis is really an intense study of a company's financial data. And by learning the basics of fundamental analysis, you can quickly assess a company's value and future potential. That's really what this is all about. When you think about it, I mean, stocks are really no different than houses or other merchandise that you may choose to buy as a business owner to turn around and sell to someone else. So you have to say, what's the value of this? So if you're a home investor, if you're like a real estate investor, then you look at a house and you say, how much is this house worth? Well, you should be able to figure that out, shouldn't you? I mean, you should be able to get a decent value in mind before you buy the house. I mean, hopefully you do. Hopefully you don't just pay the asking price and do your research later. Well, it's the same way with stocks. How much is this stock worth? What's the value? And what is the future potential for this stock? That's what fundamental analysis really tries to understand and comprehend when it comes to the stock market. Now, I want you to know there's two different kinds of analysis when it comes to stocks that are really popular. The first is what we said, fundamental analysis. And that tells us what to buy. If you want to know what stock to buy, you turn to fundamental analysis and you analyze the company's fundamentals. But there's another kind of analysis called technical analysis. And technical analysis tells us when to buy. So this is a very important distinction. Fundamental analysis tells us what to buy. Technical analysis tells us when to buy that stock. So our trading system that you hear me talk about here a lot at Follow the Money is based upon technical analysis. So it is a very powerful trading system that helps you identify. You type in any stock you want to into our trading system as a member, And then you can see whether it's time to buy that stock on the chart or not. That's technical analysis. But what our system doesn't tell you is what the fundamentals of the company are. And that's the hard work that an investor or a trader needs to put in. That's the due diligence that we encourage our members to do. So today, I'm going to talk about this fundamental analysis of how we actually use stocks. So when we use fundamental analysis, once we determine a stock that we want to buy, we then turn to the stock chart and conduct analysis on the stock's price action. And again, that's called technical analysis. I've been studying technical analysis for about 20 years, and I can tell you that reading charts has been one of the smartest skill sets that I have ever committed myself to learn. The ability to read a stock chart or an ETF chart is a lot like learning to ride a bike. You know, you may not remember that when you were a kid, but it's scary. You may fall off. You know, when it comes to technical analysis, you may lose money, you know, in the case. So it's intimidating at first. But once you learn how it works, once you learn how to do it, you're so glad that you took the time necessary to learn. So nearly all successful traders and investors use some kind of combination of both fundamental analysis and technical analysis to their advantage. The bottom line is that to be a well-rounded and successful trader, you should commit to gaining a basic understanding of both of these types of analysis. So let's talk about fundamental analysis. Here's what I look for when I conduct fundamental analysis. A few of the rules that I apply whenever I'm looking at a stock. The first thing that I look at when I'm looking at a stock is that I want the stock to be growing. I want the company to be growing. I'm not just talking about the price of the stock. I'm talking about the actual earnings of the stock. Now, let's go back to Finance 101 for a minute and remember how all of this works. Whenever you start a company, if you begin to sell widgets, let's say you start a widget company and you're selling widgets, well, all of the money that comes in to you is not called profit, right? That would be nice if every single dime you made was profit, but that's not what it is. All the money that comes into you as your business is called revenue. Revenue comes in, and of course, you want to see a company that has rising revenues. That means more and more people are buying their products, or they are raising the price of their products, and people are still choosing to pay for that. So revenues are rising. Okay, then of course the company, in order to sell their widgets, they're going to have expenses, right? They got to pay their employees. They got to finance any loans that they got to, cover any loan payments they have. They got to pay a mortgage or rent or whatever the case might be. So by the time all that's taken out, you end up having what we call a bottom line, and that is the net income. Well, when the net income is spread out, or that we can also call that profit, when that net income is spread out across all of the available shares offered by the company, all of the different shares of the stock, that is called earnings per share. It's EPS for short. So what I look for when I look at a stock is I'm looking for at least a 15% growth rate in the company's earnings per share for the last 3 years. Okay? So the earnings per share, I want to see the company growing earnings, and I want to see it growing at a rate or a clip of about 15% at least. Now, I actually prefer 20 to 25% if we get real. I mean, honestly, 15% is good, but 20% is better. 25% is even better than that. And the higher, to me, the better, right? Because, and again, there's a lot of companies that are growing their earnings at triple-digit rates. Well, what happens to the price of a stock that has triple-digit earnings growth? Well, the price of the stock is going to follow the earnings growth. So there you have it. When earnings rises, or when earnings growth is accelerating, then the price of the stock can also accelerate. So I'm looking at both the latest earnings report and I'm looking at the last 3, 4, 5 years of earnings, and I want to see earnings growth accelerating. Okay, so that's what I'm looking. So we're accelerating earnings growth. When I look at a stock, I also look at the sales figures. I like to see the last 3 years of sales figures up by 20 to 25% or more and accelerating. So when sales are rising year over year, I want to see them rising by about 20 to 25% over the previous year. Very important when you're looking at a good stock that's going to be growing and providing you a nice return. Now remember, you could find companies that don't have these metrics. You could find companies that don't meet this criteria. But the question is, why would you do that? Especially when you have 5,000 stocks to choose from and you only have so much money to invest, right? Why not invest in those companies that are actually growing? Otherwise, go put your money somewhere else. I think you want to find companies that are growing both their earnings and their sales. Let's talk about another metric that you can look at when it comes to fundamental analysis, and that is something called the return on equity. It's called ROE. This is a very important metric that tells you how the company is really using the money that it has. That number I have always desired to be at least 15%, if not higher. So a company's ROE, or rate of return on equity, should be at least 15%. I also like to look for companies that are committed to innovation. Keep your eyes peeled for new product launches and unique service offerings, as these often precede gains in earnings or share price. Also, check to see that the company has at least some institutional ownership. That is, check to see if the stock is owned by any mutual funds or hedge funds or other financial institutions. This is typically a very good sign. Ultimately, a stock can never maintain a sustained rise in share price without a strong and growing amount of institutional ownership. Now, you don't want the institutional ownership to be too high, right? And we go into more depth for all of our members. We give a lot more detail about this information in our members area, but I'm kind of giving you an overall glimpse of what this is. And basically, you don't want the institutional ownership too high, but you want it to be stable. I would say at least 40%, probably no more than 70% or so, 75%. Once you get above that level, the problem is that if institutions begin to dump the stock, then it could really be in a world of hurt, right? If you have a stock that has owned 99% institutional ownership, if pretty much all of the owners of the stock are institutions, and then suddenly they sour on the company, I mean, you're talking about demand plummeting. So I would be very careful when it comes to that. Let's talk about the PE ratio in fundamental analysis. That's a real common ratio. That's the price to earnings ratio. Ideally, and this is just an ideal because we're living in a day now where by literally every valuation metric, the stock market is wildly overvalued. So it's hard to find stocks that really meet some of these next criteria I'm going to lay out. But I'm going to give you, these are the ideal. You may not find them this way, especially in this current market. But ideally, I like a PE ratio below 20. And even more important than that, I like to see the PE ratio below its historical average. So if a stock's PE ratio, which is kind of a quick and dirty valuation metric for a stock, if that PE ratio has been like 18, right? First of all, that's below 20, so I like that. And then secondly, if its historical average is 19, but it's currently 18, I like that even more because that means that it's trading a little lower than it normally has throughout history. There's another metric that I look at called the PEG ratio. This is even more powerful than the PE ratio. This is the price to earnings to growth ratio. When I look at that metric, I like to see it below 1.5. Now, that's not always going to happen. Again, in this current environment where so many stocks are overvalued, it's hard to find stocks that haven't been bid up like that. But ideally, right, less than 1.5. There's also a metric called book value. This is a real popular fundamental metric used by value investors, especially guys like Warren Buffett. Book value is real simple. If you were to take the entire company and you were to sell it, take all the assets, pay off all the debts, how much is left, right? Well, your book value is kind of what that is. And I look for a number of below 3 as being ideal, right? Below 3 as being ideal. And by the way, this is just a little extra tip here in all of this. I always use a stop loss order. So whenever I find a stock that meets my criteria, I then use my trading system to say, now, when do I buy this stock? I don't know when to buy it. I need to know where it's at. Is it forming a new uptrend, or has it formed a new uptrend a long time ago and it's now forming a new downtrend? Is now a good time to be away from the stock, or should I be getting in now? But once I enter, I always use a stop loss to limit my losses in the event that I'm wrong. And I typically place my stop loss anywhere from 7 to 10%. Okay, so let's talk about a few more fundamental analysis tips. You know, one of the very first things that you should do when you're looking at a stock is visit the company's website. That's very, very important. If you're going to be plunking down thousands of dollars, even if you're just trading the company, check the website. You know, look at the website. Look at the and typically when you go to a company that's publicly traded, you'll find a section somewhere, either in the footer or in the top menu, at the header menu, where it'll say Investor Relations or Investors. Click on that, because that's made for you. When you click there, you'll see all of these different metrics that I'm talking about. You can read annual reports there, which are very, very interesting, especially for a company that you're interested in. For example, I've been promoting, and I say promoting, I've been saying to all of our members that I have owned Amazon. It's a company that I really, really, really like. I mean, I made money with Amazon as a bookseller in their marketplace when I was paying my way through college. And since then, I've owned the stock and seen the stock soar. I'm really a big believer in Jeff Bezos, the CEO. I think that they've got a really good thing going on. And reading their annual report is something that I like to do because I really heavily invest in that particular company. I also like to watch the quarterly earnings reports on those companies that I'm very interested in. So you can read the annual reports, which are often very, very interesting. You can watch the company presentations. They typically have a PowerPoint you can download on the investor relations page. And you can check out the quarterly earnings reports. You can also go to Google Alerts and set an alert on the stock so that you can be notified of news whenever something happens. You can also even use, those of you who are members can log in and use our own stock alert system that we have, where maybe you want to be notified if the stock reaches a certain price or falls to a certain level. Maybe you want to buy it if it crosses below 20, or maybe you want to sell if it goes above 80. Well, our stock alert system, you can simply type in the stock and type in the price that you want to be notified and hit submit, and it'll send it to you. So, or you can just go to Google and get alerts on the news on that stock. Those are really powerful things. Now, when it comes to actual fundamental analysis tools that I use, I'm going to mention 3. I'm going to give you one free option and then 2 that are paid options, okay? The first one is a website called FinViz, finviz.com, Finviz. And FinViz is a very simple website that allows you to scan for stocks based upon fundamental criteria. Okay, so you could say, I want to know all of the stocks right now that are priced less than $10, that have a book value of less than 3, and a PEG ratio of less than 1.5, right? So you could plug in all the numbers that I mentioned and go to FinViz and just kind of look through. So FinViz is a very powerful website for that purpose, and it's free. So I encourage you definitely to check out that service. We've used that often. Now, by the way, FinViz is free, but they also have an elite membership that I highly recommend. And in fact, I've created a video for those of you who sign up for FinViz if you happen to get their elite membership. And in fact, if you go to getfinviz.com, getfinviz.com, and you sign up for their elite membership, send me an email, and I'll send you that free video that we made on how to really use FinViz to your advantage. All right, so the next service that I want to mention is ycharts.com. That's the letter Y, charts.com. Now, ycharts.com is expensive. I mean, there's no doubt about it. However, if you're a real serious investor or you're a real serious trader, it gives you so much information, maybe even overkill. It's probably too much information, to be totally frank, because I have one of their top memberships, and it's wonderful for my purposes, but it is a lot of information. So that's one that you can use if you're really into it. I certainly have used it before in the past, and I recommend that service. It's a powerful service, but again, it's very expensive. Then finally, my final tool that I would tell you about fundamental analysis is IBD, or Investors Business Daily. That's run by William J. O'Neill, considered one of the top traders in the 20th century. Very, very powerful service that IBD runs. And they put out every single week, they put out this really interesting list of stocks called the IBD 50. The IBD 50. That IBD 50 list is a list of the top 50 growth stocks in the U.S. stock market based upon their insights. And they use a special system that's called CAN-SLIM. It's an acronym, CANSLIM. Let me tell you what each one of these letters stands for, because this is how they go through and identify these top 50 stocks. And when you hear this, you might notice that this might be a really great way for you to find some good fundamental stocks, good fundamentally sound stocks. Okay, so it's CAN-SLIM. This is what IBD uses. The C stands for current quarterly earnings per share has increased sharply from the same quarter's earnings reported in the prior year. So basically, current quarterly earnings per share are rising sharply year over year. So that's a very powerful thing. And so if a company does that, if a company has accelerating earnings over quarterly earnings year over year, then they're going to rank higher in IBD's ranking system. Secondly, A. A stands for annual earnings increases over the last 5 years. Does that sound familiar? That's one of the things I look for as well. So earnings, which is that net income, which is revenue minus expenses, that earnings needs to be rising over the last 5 years to get into the IBD 50 list. N, CAN-SLIM, let's go to N. N stands for new. What is new? New products. The company has new products, or it has new management, or there are other new events. In addition, the company or its stock has hit new highs. So anything new products, new management, new events, new all-time high, these kinds of things will push up the stock in Investors Business Daily's top 50 list. Okay, so there's CAN. Let's move on to the S. What does S stand for? Small supply. Small supply. So basically, small supply and large demand for a stock, it creates excessive demand and an environment in which stock prices can soar. Companies acquiring their own stock reduces the market supply of the shares available and can indicate that the company expects future profitability. So the S is really all about the number of shares. If you have a company that's constantly diluting their shares by putting out more shares and doing secondary issues, then you're going to have too much supply, and then the demand may never be able to catch up with that supply. So just like anything in economics, you want a small supply and a large demand if you want the price to go up. So that's the S. Let's move on in CAN-SLIM to the L. L stands for leaders. So what you want to do here is you want to choose leaders over laggard stocks within the same industry. And you can use the relative strength as a way to help you understand which ones are leading and which ones are lagging. So, for example, if you're looking at a particular industry, like maybe you're wanting to really invest in the copper industry, for example, or maybe you want to really invest in the gold mining industry. Well, what you want to do is you don't want to just buy any gold mining stock or any copper mining stock. You want to find the stocks that are leading. So the leading stocks within that industry are going to rise to the top. Okay, so there's L. I stands for institutional sponsorship. Pick stocks that have institutional sponsorship by a few institutions with recent above average performance. Be cautious of stocks that are over-owned by institutions. We just discussed this, didn't we? So it's very powerful. Institutional sponsorship means that there are companies who are financial institutions who own the stock, they believe in the stock, and they are going to be considered institutional sponsors. You want to find stocks that actually have institutions owning the company. And also, M, finally, in CanSlim. M is market direction. Determine market direction by reviewing the market averages daily. Is the current stock market in an uptrend? Well, that's good. Why is that good? Well, because 3 out of 4 stocks will follow the major market indices. So if you're looking at the S&P 500 and the S&P 500 is rip-roaring higher, then 3 out of 4 stocks are going to be moving and following that average. Whereas if the stock market is in a bear market, then even your really good growth stocks are going to be suffering in that environment. 3 out of 4 of them will tend to follow the overall direction of the stock market. All right, so there are all kinds of factors, as you can see, that play in to fundamental analysis. And, I really want to encourage you to be picky. It's your money. You don't have to just buy any stock because some newsletter says that you should buy it. You don't have to buy any stock because your cousin or your uncle or some guy on TV says that you should buy it. You can do your own due diligence. You can do your own planning, right? There's no doubt about it. On our next program, I'm going to introduce you to a powerful but very little known stock picking method that consistently beats the markets, and we refer to it as the high caliber method. Be sure to tune in next time to learn about that strategy. Hey friends, Jerry Robinson here from Follow the Money. Are you ready to learn how to trade the financial markets? Or are you ready to take your current trading to the next level? I want to show you how to trade stocks, commodities, currencies, and options for consistent profits. If you're ready to learn, I'm ready to teach you. In fact, we have created a very powerful trading software and education system that provides you with entry and exit signals on every US-based ETF and stock. Our powerful system allows you to identify the current trend in any US-based ETF or stock with high probability entry and exit ideas. You can use our software on any device. And you'll also get access to ongoing live trading coaching videos. Whether you're a complete newbie to trading or whether you're an experienced trader, you'll love our live video coaching calls held every Tuesday and Friday morning during the live market hours. In addition to ongoing training through our videos, you'll also receive our best trading ideas every evening in our nightly trading report, in which you can log into our website and check out the latest uptrends and downtrends, along with many other high probability trading ideas generated by our system. A lot of people already know how to trade, but they just need a coach. They need someone to help them along. And if that's you, you have found, I believe, the right solution in our trading software and education system. And right now, we are running a very special deal for 7-day free trial for our entire trading system. Try out our system. See if it's right for you. Complete, unlimited, and unrestricted access to everything. Simply go to ftmdaily.com/pro and sign up. Choose either monthly or annual and get started today. ftmdaily.com/pro.